Hey guys, so I want to take you really quickly on a little bit of a trade overview to show you guys this little 2K profit trade that I made on Meta. Now, we know Meta had earnings. Them bad boys had a $70 run up to the upside. And what happened? They left us with this massive gap. And so the market tells us that, hey, gaps attempt to get filled. They will attempt to try to get that price back down, fill the gap before any additional upside action take place. But sometimes it don't always work like that. Sometimes gaps just don't get filled immediately, and hey, it happens. But in this case, I didn't quite react fully on us needed to refill that gap. There were a few other things that I was reacting on, but there's this core little setup that I looked at. I told my community, my trading community, hey, they have a rising wedge. Okay. You guys see me talk a lot about pattern recognition, whether it's double top, double bottom, flags, whatever it may be. In this case, it was a rising wedge. And I'm going to show you guys exactly what that looks like on the charts and what is supposed to happen and how that thing played out that led to this pretty great trade. All right, so let's go to the chart. So this right here is what you call a rising wedge. And what a rising wedge is when the price is maybe going up and down, up and down, up and down, but the converging lines are getting tighter and tighter and tighter. And sometimes the candles are getting smaller and smaller and smaller. You have to understand something about these charts here, okay? You will see core setups or core patterns across the board, but they will not always take perfect form. But you will still be able to spot them, or if you get to Picasso in that chart and you kind of draw those lines and you begin to see how things are starting to take form, these things will usually present themselves pretty well. Okay. So in this case, with Meta, they gave us a nice little wedge to the upside here. Now, these little lines here that I have are just resistance of where this thing could potentially get stopped out and start to get smaller and start to break out of that wedge. So the initial was right up in this area here, as you guys can see, where we kept getting these hits over and over and over again around this area here, right up in here. This is what I was looking for to see if we would kind of get a hit here. That things start getting smaller and we start to break out. But as you guys can see, we kind of came down a little bit and we were still in there. Now, we pushed up above that, broke above it, got a little tweezer here before the market closed. And so when the market opened back up, that's when things got exciting because the breakout happened, but it happened in a gap down manner. So it wasn't like, okay, we got this going here, here, and then we got a breakout on the day of. When I called this out to my trading community, this right here was much smaller. We hadn't quite gotten this far just yet, but I said, wait for a solid breakout. You don't want to just jump in prematurely and nothing has broken out to give us indication that this thing is going to come down. Gapping down, this just right here, this was Thursday, this little candle here, okay? So I'm going to take this off. This was Thursday, and then this is when the market opened Friday. And when you hear someone say gap down or gapped up, it's just basically saying that the market opened at a much lower price or a much higher price than it was before, to the point where there is no price action that has taken place in this little piece here. Okay, so we went from here all the way down here. Now, this would be looked at as a breakout. We're outside of those conversion lines, but that is not when I made my move. You don't jump in yet. Give yourself some confirmation or a couple of candles to say, all right, now I feel a bit better about the fact that this thing is going to come down. Now, when I shared this, we were on the 15-minute time frame, okay? That takes some of the candles off, make things a little bit easier to see. So this is where I made my move. We got this breakout here. We came down. We got another nice little move here, but I didn't make my move on either one of these. I got in right up in here around 10, probably like around 10:05. So what I do is I write everything down. It's going to be the most important thing is to write down your entries, your exits, the time you got in, and the price that you got in so that you can have as much detail as possible. So I remember writing down about 10:05 is when I made my move. Now, I sat in this trade about 2.5 hours to go from here to this candle here, and then I came out of that trade. This right here was a pretty nice move. If you go from here to approximately here, it just really kind of depends, like when you gotta bring that thing down a little bit. But I did catch $11 and some change move. Okay, damn good move. So that right there is just basically reacting to this wedge happening and a breakout taking place. I was initially looking to see if we got a breakout from here, and I made my move on this thing on this 15-minute time frame. It shows across the board. The 15-minute, when we go to the 5 where we just were, you'll be able to see it. It's just a little bit bigger, but it shows across the board. And I made my move on this one on this 15-minute time frame. Did not make my move prematurely. Okay. I waited until we got outside of those converging lines there. And in this case, we got it in the manner of a gap down. All right. And so this thing here is just another one of those ways that you are able to identify certain things in the chart to know potentially what is going to happen next. And like I always say and always remind you that patterns can be invalidated. We could have the most cleanest setup ever to say this is what's going to happen and something completely opposite happen. And I talk about this pattern in Little Black Book of Candlestick Patterns, okay, where I have the rising wedge and a falling wedge, okay? So the rising wedge, usually you get a breakout to the downside, and a falling wedge, you get a breakout to the upside where it is bullish. In this case, it was bearish. I was reacting to a number of things with this trade. We had this rising wedge here. We had upcoming resistance that we were working with up here at the top of this wedge. We did get this gap down here where we finally got ourselves a bit of a breakout from that wedge. And then we got this massive downside gap here from when they had their earnings. So let's get an info line really quickly and let's go up here. We are working with approximately a $39 gap left that needs to be filled to that downside. And in the event that Meta breaks back below approximately 712.26, we could begin to see them bringing this thing down to try to get this gap filled before we see Meta make another upside move. So it's a little bit of a correction, and it's all to be expected. All right. So I definitely wanted to share that with you guys because, hey, these type of things that you're identifying in the chart is definitely one of those things that can help you in your trading to where you don't got to overcomplicate processes. You see a wedge, wait for the breakout, whether it's an upside or a downside. You see a flag, wait for the breakout. You get a double top, double bottom. You can have a number of ways you can make your move. Pattern recognition, okay, to simplify your trading. So that was Meta. That was the trade that I did on Friday. And that was what I shared with my trading community and in my Patreon on Thursday. So as you guys can see, even though things pop up, it doesn't mean it's going to always start to make shape the day of. It could be the next day, it could be the next week. You just have to be patient to let things play out. I hope this helped, and I hope this is something you guys can add to your arsenal. And I will see you guys on those charts. Happy trading.